Hello again, and this is John from Options Trading Pilot. Thank you for joining me. We are going to be looking at a trade in Tesla, or a series of trades in Tesla for the week using Strangles. This is not for the week apart. This is a very high risk trade. Would I recommend it? No. It uses up a lot of buying power, as you'll see. And even though we had very wide markets, very risky trade, a lot of management, and frankly, it takes the focus off other profitable trades because you can only do so much during the day. So before we get started, I want to share a little bit about us. We are Options Trading Pilot. We trade stocks, cryptos, futures, and commodities. All day long, every day, we post out these trades on our Discord site, membership site, almost in real time. What my business partner Guillermo and I do, we trade all day, we post those out. We also will do one-on-one training with you in all these different areas, teaching you whatever questions you have, but also teaching you the basics or more advanced methods of trading options. The one I'm about to show you today is not recommended, but I wanted to take an experiment to see what it was like during the week. So let's get into it. Options Trading Pilot. Like the video, come and see us, try us out for free. So this was a trade in this example, real example, but we'll say there's 10 contracts involved, and you can scale up or down from there. So I put a trade on Tuesday, and I can't believe it's Friday. This has been very time-consuming mentally. So what I've done is around the beginning, somewhere in here in the morning on Tuesday, I put on a Strangle, an 800, 600. So I sold an 800, sold a 600. I received $2.25 per contract on each side. So on that Strangle, I received about $500. The delta, and that's the chance of the stock reaching that 800 or 600, was about 5% on either side. So all should be good. So, but the challenge is your business, your buying power reduction. By doing that trade, it takes about $25,000 of your account and earmarks it as potential buying power reduction. That's quite a bit for one trade. To make $500, you're putting up $25,000 to make $500. But I'll do anything for my fans. So just kidding. But working through that. So now I always like to try to stay delta neutral. The delta at the beginning here, like I said, was around 5. And then what I tried to do was stay delta neutral. So now I held this all day on Tuesday, all day on Wednesday. And then we get to Thursday and things start really going crazy. So it's trying to stay delta neutral, but the stock went from let's say 725, now it's up to 756. Tesla can really move. I trade Tesla at least every month, but usually a couple times a month. So now the stock has moved up from 716 up to about 740, and it actually ended up to almost up to 773, it looks like. So could have been in potential trouble on the top end. So what I had to do was I rolled up my puts. So I sold my 600 puts, and instead of selling this, I bought back my 600 puts and I sold out the 660 puts. That allowed me to take my delta from 3 up to 7. Still really minuscule numbers, but trying to get a little more premium and be a little more careful trying to stay delta neutral. Well, that earned me another $2,000 with 10 contracts. So the stock kept going up. Now my delta is back down to 5. This is in this point. Now the stock keeps going up into here. So I rolled up again from 660 for the put. So I bought the 660 back, sold the 680 back in this area. Now the stock is $760. By doing that, I collected another $1,200 in gain in my pocket. Gain in my pocket, but I'm statistically taking more risk because the delta is higher. So now my delta is 10. So as things go, this was not the right time, and I should have probably stayed in the trade that I originally put on of an 800, 600, and I would have been fine for the week. But hindsight is 2020. You have no idea what's going to happen here, just as much as I don't know what's going to happen at the end of the day. So roll into the 10th, which is today. Now you see what the market has done today. So now I'm rolling down calls because the call side is no longer a problem. So now on my call side, I rolled my delta down from a 5 delta to a 10 delta. And that was when the stock was $710. That collected another $2,500 in premium in my pocket. More risk because I've now reduced where my break even is on the call side. So keep going later on in the day in here. Now I have a 1 delta on the top. It was a 10, but since the stock kept going down, now it's a 1 delta, 1% chance. Well, you're not making any premium with that. But what's happened is now on the bottom side, I'm losing money. So I have to keep reducing my calls on the top side in order to keep my basis somewhat neutral. So I moved I rolled my calls down from a 1 delta to a 6 delta. So instead of I went from 800 to a 750 call. And then I rolled from a 750 down to a 725 call. And mind you, this is expiring today within just a couple hours. That collected me, or I collected another $1,300 for 10 contracts in that. So where do we stand right now? This will be a 2-part series. I'm doing what I'm doing right now real time, and I'll record the results of this and tack it on to the end of this on Sunday. So right now, the stock is sitting at 867, 687. So I started with an 800, 600, everything was fine. I started chasing it up, then I started chasing it down. Now I only have 7 points until I'm in the money. If I get in the money, the stock gets put to me today. So far on this trade for the week, I've made almost $12,000. There is another $1,500 to make on this trade. So almost 15,000 if this trade goes well. Now, what if it doesn't go well? If it goes well, both sides will get closed out. And we'll switch over to this view. So we're looking at today. Right now, my 725 call has a delta right here of 3% chance that it'll be above 725. I'm not rolling this down, even though I could, and maybe I should. I'm not going to because the delta can change quickly on Tesla. However, the 680 is in the expected move for today now because it's gone down 28 points in one day, and that is a 26% delta. That's a 1 in 4 chance that I'm going to be breached, and then I'll have to take this stock. So I have 2 choices. Do nothing and let the stock get put to me if it goes down 10 points from now. Now I'll be long Tesla, or I can close it out and probably take a loss on this entire exercise that I did for the week. So I'm not going to take the loss on the trade. I actually like Tesla long, not only for the cars, but really for their battery technology. So let's say I get put this stock for $680. Let's forget about commissions, taxes, basis, all those things. I get put the stock at 680. Now I own 10 calls, or I'm sorry, 1,000 shares of Tesla. I can now sell 10 calls, let's say. So if I go to next week, and then you have to think through these types of strategies. So I don't want to hold it through earnings, but let's say I go out 35 days. Now I'm at my basis, remember, is 680, but I think it's really overdone today. I can go out here and sell. I own it at 680, and I'm only going to hold it this for 35 days. I can go out to 730. Well, I can sell each contract for $44, which is equivalent of $4,400 per contract. So that's a huge amount of money. And so even if I hold this, now it could go down, but if I put this at 680, it goes up to say 730. That's still a 50-point increase in gain on the capital gains of the share price. Plus, I'm going to collect another $4,400 per contract. That's a pretty good deal, I think. So that's all to say that Tesla goes up from here. If it goes from 680 down to 600, then I'm going to be in a little bit of a hurt, but I'm still going, the exercise would still be sell covered calls, reduce basis. So in that example, I own it at 680. Monday, if it did get put to me, I'd go out to probably 740, sell at 40. So now my 680, my break even is 640 because I'm collecting in premium. Now my basis is 640. Wait for that to run for 35 days. If it gets taken, great, no problem. Big capital gain in a tax protected account, I'll take it. If it goes down, now my basis is 640, rinse and repeat. Just get out there again and do another covered call in 35 days and do it again, reduce your basis. If the stock gets taken above 680, no worries. If it doesn't and it keeps going down, sell premium again, keep reducing your basis, and that's the game. That is the game for the week. Now, what would I prefer? I prefer to be out of the trade today. Right now I have 9 points that I'm playing with, and I have 3 hours to go. Will I make it or not? I don't know. It's about a 1 in 3 chance that it'll get breached and I'll be owning the stock. So I plan on adding to this video after the close, and I'll see you then and tell you what transpired. Thank you. Okay, so it's about 2 hours later. We're going to finish up this Tesla story. I decided with an hour and a half left to go in the day that I was going to go ahead and close these trades out, both sides. I have things to do. I cannot stay till the market closes today. I'm in big trouble. So went ahead and I took the calls off for 5 cents. If you remember, my calls were 725. The stock's at 693. It's been down all day. I had a little bit of green. So I took that off, and the reason for that was a 99% gain. I could hold out for the extra 1%, but why? I have 99% win. If the stock decides to rally, now I'm in trouble again, just trying to get greedy for that 1%. I took the 1% off. That cost me $10 per contract, no problem. Now the good part is, you can see here that the stock did rally, not very much, but it did rally. And during that rally up, now the put side, because we're talking about huge theta and gamma changing now in the last hour and a half of trading. So with the stock popping up, I have 13 points that I can play with on Tesla, but 13 points is nothing when you're talking a $700 stock. So I went ahead and just closed out the bottom side of the trade. That cost me about $20 per contract. Again, no problem. Take it and move on. I'm completely out of Tesla. So we started the week with an 800, 600. That was about $500 in premium given to me per contract, 10 contracts, $5,000. Back and forth all week, as I showed, in a bunch of rolls to keep delta neutral for the week. So at the end of the week, the tally is $11,050. Say there's a little commission in there, so let's just call it an even 11,000 gain on 10 contracts of the Tesla Strangle. Again, I Really don't recommend trading like that. I think it was a little bit too stressful for me. I could feel a little bit of emotion. That's not a good thing when you're trading. So it's probably not something I do in the future, but I'll probably do it in the future. But it's a fun way to keep interested for the week, especially on a slow week. And this week was fairly slow up until today. So anyway, that's the end of the video. Come out to CS Options Trading Pilot. Thank you. Bye.